Missing trades can affect the trader more negatively psychology-wise than a losing trade. Now that sounds super backwards. Why is that the case? Well, in today's video, I'm going to share with you some information that could turn that around. Because if missing trades throws you off and leads to a negative day full of losses, psychological sabotage, and a predictable negative outcome, watch closely. This video is for you. Let's dive into today's content. Let's start out with talking about why missed trades hurt more than losers. When you have a losing trade, there's an act of finality. There's always something that went wrong in the losing trade. The loss is over and you're moving forward to working on the loss, and you're back to the window of where you have hope to change the strategy, to change the approach, to change the execution. You're in the realm of control again. A loss is a final thing, and while you lost some profit or you lost some money from your account, you have something to work on and you can move forward to that. A missed trade is an opportunity that you missed on, and it's a hypothetical scenario. This is what I call the dreamland. And in the dreamland of a missed trade, anything could have happened. You could have got 100 points. You could have got 1,000 points. You could have got a yacht, a Lamborghini, a house by the beach, and everything in your dreams. In dreamland, anything is possible, and I never hear traders tell me and be upset about a trade that they missed that they would have lost. Never heard somebody say, if I could have only lost this trade, I would have done so much better. Or this lost trade that I missed out on that I didn't take ended up causing revenge trading and I went to try to get my money back. No, none of that ever happens. The missed opportunities only cause revenge trading and chasing the market when you believe that what you missed was a loss. The missed trades only hurt you deeply psychologically when you allow and convince yourself to believe that what you missed was a winner. Now let's talk about your brain and lost opportunity. All right, lost opportunities feel like they were more controllable because they didn't happen. Your brain begins to imagine perfect outcomes only. This was going to be the trade that I executed, and I bought on the lowest tick, took zero risk on the trade, and I extended it up to my ultimate target. And the moment my target hit on a top tick, the market reversed and proved that I was one of the best human traders alive. All right, this is how your brain will hypothesize it. It anchors to only the best outcomes, and regret for not being able to execute on the opportunity of a positive trade is stronger emotionally than a loss. Something that you've already realized. A loss can be disappointing, but there's nothing within the loss that gives you the window to imagine how it would have went any different because it's already happened. The loss is crystallized. It's in your account. This is when you trick your brain to believe that what you're in at the moment, because you missed an opportunity, is urgency. The urgency clock starts to tick. The chemicals start to get released in your brain, and the next steps are predictable, but sadly unavoidable. Now, I want to talk to you next about what happens after that process, because this is the real danger, and it's making up for the miss. What does the brain decide? Well, you know you can't go back in time and catch a trade that you quote unquote decide that you missed, that you would have caught in retrospect. So you go on to the next one. But you go on in the past with an urgency to recoup an opportunity that is hypothetical, but you start chasing it for real this time, and suddenly your risk becomes a little bit looser. Your conditions to enter the trade become a little bit more tolerant. If you had qualifiers, instead of waiting for the qualifiers, we almost have what I'm looking for becomes a tradable condition. We're almost at my level. I'm almost seeing a buy and balance. We're almost there. I might as well just buy it. You become a little more forgiving, more accommodating for an opportunity because you want to get yourself back into the trade, because you don't believe you're looking for a high probability trade. You believe that getting into a trade is the way to take advantage of the current moment because you missed the opportunity of a past moment. But you know what happens when you start to put that into practice? You end up getting a losing trade. And the one thing that really pisses off your ego more than a missed opportunity is a missed opportunity followed up directly by a loss. Because now, not only did you hypothetically miss something that could have been amazing, you're generating yet another loss, which angers you even more and forces you to look for another trade with even less and more relaxed conditions and criteria, which at this point generates even more losses. and you relax your criteria even more until you get to the point that you just lose so much and you have to walk away and you stop. But suddenly, what you've told your brain is the conditioning you're starting to wire yourself with is when I miss a trade, I'm going to chase it and try to get any trade in hopes of getting the money back. And when I chase it, I'm going to lose. And when I lose, I'm going to chase it again and I'm going to lose some more. And finally, when I've lost and it hurts and I decide to walk away, I'm going to be relieved by the fact that I'm no longer trading. Now, listen to the dangerous pattern that this writes and encodes in your psychology. You start out by looking for a great trade. The moment something happens and you're not on board, which means you have to get every single trade of the market, tick to tick, you have to be in all the time, or else you're going to feel like you missed an opportunity. When you miss an opportunity, you chase, you get the wrong opportunity, you lose, and you repeat until you've lost so much that you reward your brain by walking away for the session. Now, the more that you follow through with this process and the more that you allow this to happen, the more this becomes not only encoding, but a program. And when you set it in your subconscious mind as a program, it looks to start executing this program the next time that you trade. Instead of being triggered by the condition of a mistrade, your subconscious mind will force you to miss a trade or force you to see anything as a mistrade so it could carry on with the sabotage programming to get you to the point that you lose enough to walk away just so your reward could be the relief that you stop losing. This is the encoding that traders are giving themselves unintentionally and inadvertently, but it becomes code, it becomes habit, and it becomes self-fulfilling prophecy. So great, we get it. We feel the pain together at the moment. What's the big takeaway here? I'm about to give you a reframe and a big aha moment. This is what I'm here to tell you. You didn't miss anything. Money only exists if you were in the trade. So there was no actual loss. You actually missed nothing. But what you did gain instead is knowing where the direction went without risk, which is a confirmation mechanism. The market is telling you your bias and your analysis is working. All right. You gained structure, more market structure, more information, more auction information without any stress. And you got more confirmation without emotion. So instead of missing a trade, the reframe is eliminating, and I forbid you to continue saying that you miss trades, eliminating that language entirely from your mind, especially if you've gone through multiple cycles of repetition, of revenge, followed by loss of money and the reward being you stop trading. If you've been through that cycle enough, those words need to stop completely today. The words you could use instead is, I have a gained information trade. The beauty of that is when you have gained information, you give yourself confidence, you give yourself edge, you give yourself the ability to use what you previously thought you missed as a mechanism to help you qualify and quantify your next trade, which makes it less risky because you have now more information on the back of your bias and your analysis. So you didn't miss anything. You have gained trades. You have no more missed trades. We only want to say, I have a gained information trade in place of where you said the other dirty word of missed trades. The difference between the professional traders and the ones still trying to figure it out is that when a professional trade has a gained information trade, notice what I did there, they start to look into it and start to log what was actually happening in that time. What did they miss? Did the trade price come down close to their level? Did it get below their level? What was the opportunity to trail the trade? If I was in it, how much higher would have it gotten? How could have I trailed my stop loss? Did my target hit? How close was it to the target? What did liquidity look like? Did this actual opportunity that I envisioned in my head end up playing out for the remainder of the session? Or did I just actually miss out on one chunk of price action that ended up reversing and going lower? And as you start to look at this for information and for cues, a lot more of the trade and the next best trade ends up becoming evident. It becomes clear and it becomes by law the thing and the only thing that you begin to see on the charts. You only see gained information trades or trades that you got into. And both of those are the only two type of trades that there is. And by using this method, you start to close loops when you're missing opportunity. All right, nothing feels unresolved because that will start to trigger urgency. and you just basically get confidence for free. It's the market's way of giving you a compliment. Imagine thinking the market's going to go up and it goes up, and the market says, "Hey, look, here's a compliment. Great job. Your analysis was spot on." And imagine you being upset about that. This is kind of the irony of the whole situation. If somebody on the street said, "You have a nice smile," you turn to them and you slap them in the face and you start getting angry and start revenge slapping them out of nowhere. It would be a shock. Yet we allow ourselves to do that in the market. Take the compliment, take the information, and apply it to the next best trade. You never miss anything. If you've been only trading for the last even 30 years, well, guess what? The futures markets have been around since the 1800s. You've missed more trades already than you're ever going to get in your life. How come we're not upset about that? So the takeaway I want you to get from this video is that missed trades don't destabilize you. All right. Chasing them does. If missing trades hurts and triggers emotional or FOMO type of negative feelings, it's not about the loss. It's not about the loss of opportunity. It's more of an identity issue. And the opportunity here is to work on the identity. Many times losses in the markets are not market responsible losses, but they're really manifestations of areas in your life that you have to deal with on a psychology level. And missing a trade may be anchored to a time in your life where you've missed a lot of opportunities that you regret. You didn't take a job maybe that you should have. You didn't marry a person that you loved. These or anything else where you feel like you should have done it, but you're looking back with deep regret. Those emotions instantly manifest in your trading as well when you start to create those conditions. So if you're having issues with FOMO, if you're having issues of triggering negative emotion after a missed trade, the reframe that you need is that it's a gained information trade. Look on this information with positivity, extract the value out of it, extract the learning, and carry it forward to your next best trade. Because when you removed all the missed trades, all you're left with is information that influences your next best trade. And at the end of the day, this is all that we do as traders. We seek the next best trade and we execute on it. Lastly, when you fix the identity issue, the execution issue itself becomes less prominent and gets eliminated entirely. I hope you've liked this video. If you did, click the like button, leave a comment. I'd love to continue this dialogue with you. I wanted to do more of a psychology focused video today, and we're going to get back to some great content in future videos as well on YouTube. I'd love to hear how you enjoyed it. Let's get active in the comment section. Love you guys. Thank you for watching. Enjoy the rest of your day. And if you want to learn about order flow trading, head on over to TradeProAcademy.com and have a look at the Order Flow Vault. It's a course, it's a trading live application environment, and it's a community that really focuses on order flow execution, analysis, and trading like a professional. Thank you for tuning in and enjoy the rest of your day. Take care and goodbye.